How's it going, everybody? Welcome back to AZ Trading. Hope you're doing well. It was the 22nd of September on the Dow Jones, the US 30, and in this video I'll be going over my thoughts and analysis that led us to capture this chunky bearish move that spans over just around 300 points. So stick around if you'd like to know how to capture moves just like this one in the future. If you're new here, I know what you're thinking, oh no, not another backtesting guru, but if you've seen any of my previous videos, you know what's coming. It's the executions and the proof that this trade was actually taken. So I'll just click the executions, the labels, as well as my orders and positions. And here you can see my initial entry position where I took off my first partial, my second partial all the way down here, and we still have our 10% partial to run with our stop loss set to our break even level. Alright, enough with the proof. You've seen it too much on this channel already, so let's just get straight into the trade. But first, if you haven't joined our community Discord, this could be a powerful learning tool for your trading, so feel free to join and connect with like-minded traders. The link to join will be at the top of the description. So the pattern we all know and love to trade is the RMR pattern, but before we get into this Dow trade, I need to speak about the NASDAQ. And so here on the NASDAQ, you can see we took another trade prior to our Dow trade. I'm just going to speak through this one very briefly because if I put two trades in one video, the video would just be too long. So long story short, on the NASDAQ, we have a raid above this high. After the raid, we look for a bearish shift. So once it broke these swing lows, we have a bearish market structure shift. And during that market structure shift, we've been presented a gap over here. If we extend that one all the way out, you can see that I placed my short right there. Next, I placed my stop at the top of the raid over here and my objectives below. And for my objective, I took off a partial over here where I took off 40%, leaving the rest to run. Leaving the rest to run, I reduced my stop to break even and eventually got stopped out. But what was the point of me even going through this trade? And so with all of my trades, I like to have a daily bias to help me determine whether I'll be looking for bullish trades or bearish trades. And if we just zoom out to a daily chart, a big boy chart, we have this daily swing low over here that we're just about to reach. So if I extend that one all the way out, we can see that that daily swing low, as price reached that area, it actually made an equal low, which means that resting below this area is a lot of liquidity, meaning it is a likely objective. Whereas if we look above price, the areas of liquidity would be this swing high and this swing high up here. But if we make a comparison whether these two swing highs have more liquidity than this daily swing low, which one would you say is a more likely objective? If you're thinking what I'm thinking, this daily swing low is the more likely objective. So just with that in mind, I was filtering out all the bullish trades and only looking for the bearish trades. And if you can take a guess where my next partial would be, it would be at this daily swing low, which we never reached. Alright, I'm just going to jump onto the S&P and I want you to monitor these swing highs over here. We can see that NASDAQ, we raided those highs. We're now on the S&P and you can see that those highs have actually not been raided and they have made some relative equal highs. And finally, we're on the Dow and you can see that those highs were not raided either and they also made some relative equal highs. But not only that, if we look at the liquidity resting below the market, we have these relative equal lows over here. And if we look to the left, we also have these resting equal lows that are undoubtedly too clean. So at this point in time, my mind is thinking we have these relative equal lows over here, another set of equal lows down here, and on the NASDAQ, we have those daily equal lows. My bias is very bearish, so I want to be looking for bearish trades. However, when I got stopped out on the NASDAQ, my mind was thinking, why doesn't price want the large area of liquidity and why is it pumping? You would never see these relative equal highs on the NASDAQ, but if you looked at the S&P or the Dow, you can see that price is simply pumping to a short-term area of liquidity above since those highs are just a bit too clean. So essentially, the market has a lot of liquidity down here. This is their final objective, but before they reach there and take all the money for themselves, they want to entice buy-side liquidity, entice liquidity to be generated above. They will then take that liquidity above before they find a way to reach their final objective. So in a sense, the market is trying to stop out as many traders as they can before they reach their final objective. It's very greedy from the markets, but you can also see that it's a very efficient way to stop out as many traders as possible before reaching the objective. Alright, that finally brings us on to this Dow trade. And if we look at the RMR in a very short-term sense, we could argue that breaking above this swing high could be the raid. Next, breaking through a short-term swing low could be a structure shift, where we have a gap presented over here, and you can see that if we placed our short when it retraced into that gap with our stop at the swing high, we would have been stopped. So this short RMR by itself would have been a failed RMR. So why and how did I place a short position during the raid leg when it's very specific that the RMR setup needs a shift and then a return to participate? Alright, so I'm just going to scroll to the left and we can see that we have these relative equal highs over here. As soon as we break through those equal highs, we can call this the raid. The next thing we look for is the market structure shift, and you can argue that under this swing low we have a market structure shift. However, if we look above, there is simply no gap over here, so there's not a great price to short at. So instead, the market structure shift that I saw was under this swing low and under these bigger swing lows. So this is a more decisive, larger time frame market structure shift. I've just zoomed into a 5-minute chart where this raid is a bit clearer and the market structure shift is a bit clearer as well. And now if we look for a return area during that market structure shift, we can see that a gap has been presented over here. If I extend that one all the way to the right, now we can see that my short position over here, although it was placed in a short-term raid leg, it was actually being placed in a higher time frame return leg. And so that's where I placed my short position with my stop loss at the top of this raid swing right there. And then I could look for objectives below. I've talked about this in the past about having very optimistic trade entries. What this means is we've got a gap in this 3-minute chart which is slightly above the 5-minute gap. So this would be a very optimistic price entry, so a really excellent price entry. So if we waited for this gap to be pierced and placed our short there, that would be an incredible entry. However, getting this entry from the 5-minute gap return area, this is still considered a very fair price and I'm very happy with this entry. If you're wondering how to determine if it's a fair price or not, we draw a fib from the top of the raid swing to the bottom of the market structure shift, so these swing lows, the bottom of it, and we can see that anywhere above this 50% line up here is considered a fair price. And our entry position and this swing afterwards are very deep into a fair price, so they're in a very premium price. Alright, now for objectives, I look at two main things, which are gaps and liquidity. So as price dumps down, yes, I could take a partial at this swing low, but I opted to take a partial as this gap over here was filled. I took a 40%, and during this bearish leg, can you see what price created? Price created another set of equal lows down here. So now not only do we have one set of equal lows, a second set of equal lows, and if you remember on the NASDAQ, those daily equal lows, you can kind of get a gauge that price is very likely to be bearish to take out those areas of liquidity. Volatility tends to drop off. I was happy to hold on to my position since these areas of liquidity were just too likely in my eyes. So we scroll through price and we can see that that first set of equal lows actually made a third equal low, and then eventually price broke through those equal lows, broke through the second set of equal lows, and that's where I took off 50% of my position over here, which left me 10% of my original position to run, where I reduced that stop loss to break even. So whether by the end of the week price completely shits itself or stops me out at my break-even level, I won't be touching my little 10%. And I'll just turn on the orders and the position so you can see that I do have 10% here running with the stop loss at break-even. Alright, that'll be it from me guys. I'll just show you the naked chart if you'd like to take a screenshot and outline the RMR yourselves. But other than that, if you enjoyed this video or learnt something new, don't forget to hit that like button and subscribe. It makes me very happy. And if you've got any questions, you can leave them down below or join our Discord server and send them into the chat rooms. I'm sure someone will be happy to help, if not me. But until next time, have a great weekend and take care everyone. Peace.